Welcome to the Foundry, where leaders are forged daily. And now your host, George Roberts.
Welcome back, entrepreneurs. Today we have Douglas Dowell, founder of Eagles Flight Equity Group. Welcome to the show, Douglas.
Thank you for having me on, George. Looking forward to it.
Great. Why don't you give us a quick background? I know you've done a lot of interesting things in your life, from running your own law firm to the present.
Yeah, sure. Lots of W-2. I guess I should start at the beginning. A good friend of mine in high school had a small landlording business. His dad owned some rental properties, and I think that's where it was like, that's interesting. You can make a business out of renting out apartments and houses, and I found that interesting. So I really kind of got the bug, and it kind of drove my economics and undergrad, economics and finance undergrad. Really became interested in commercial real estate from my real estate investing course in undergrad. So I really looked at that, went to work for a bank for a while before I went to law school. Again, really focusing my education on taxation, estate planning, and especially real estate. So when I got out of there, I went to work for Housing Authority of Kansas City for a while as a development coordinator, if I can say that word. We're helping do public-private partnerships with the HUD programs in terms of construction and whatnot. Then decided to take a flyer on the brokerage side of the business, which was a misfire. I didn't really seem a fit. I think now it would be interesting to try it again, but back then I tried Marcus and Millichap for a while. After that experience, went to work for Sprint as actually an in-house real estate agent, effectively, and doing office leases and tower lease stuff. So that was interesting. Then got the bug to say, well, I'm going to go ahead and try and practice law here for a while, and eventually ended up with my own firm doing bankruptcy work and some landlord-tenant stuff. Occasional occasional real estate case here and there. But anyway, that wasn't a great fit. So after that experience, went into tax and really did tax for quite a few years. While I started to get the bug, took a course in raising private money back in 2010. That was probably the worst mistake I made, George, actually, is I thought apartments might be a good investment back in 2010. And we tried a couple times with some friends of mine. And again, I didn't have enough information, didn't have the right mentor, didn't have the right right environment. And it was kind of the blind leading the blind, unfortunately. So we didn't put anything together back then. And so literally had an on and off love affair with that, within commercial mortgage brokerage. Actually, I tried that for a while. And that was just okay. I wasn't crazy about it. And then, so up until about 2018, I really started getting the bug again, and I started looking seriously again at, okay, what would it take to get a syndication going? I know it failed before, so I had a little bit better. I had a great mastermind partner who was doing really well, and in a sense, really done super great in multi-tenant retail. And so that was the kind of the impetus to get back in the real estate game until recently. I'm like, okay, it's time to really get after it. So really looking into, what asset class did I want? What do I want to do? And, kind of figuring those questions out. And thankfully, from the miracle of Zoom networking, I've happened to have a bunch of networking meetings that have been great. And it turns out it's like, wait a minute, you want to be a capital raiser. And I didn't really realize that was actually a lane I could be in. And it turns out, I think that's the ultimate case of where we're at today.
Cool.
Yeah.
Well, let's start back with the landlord-tenant law. So a lot of
Sure.
evictions there. Any interesting stories that you can tell on the air?
Yeah, there's been a couple. There was a really funky, what would you call it, land contract case that we took a client, and it turns out our client was a little nuts. I might have exposed myself to lawsuit there, but my opposing counsel would probably agree with me in my defense. The truth is the ultimate defense, right? It was kind of an interesting thing to see, what happens when a land contract goes sideways and you don't fulfill your promises. It's an eviction case in the end, and so that was interesting. And another one where the landlord did not document the process at all, and I was actually on the defense side, and showing, okay, if you don't carry your documentation, you're going to be in trouble. And was able to defeat the case just because they didn't have their ducks in a row, and the eviction case was defeated because they didn't have their notices and stuff like that. So it was educational for sure.
Yeah, awesome. Yeah, well, the reason I ask is that we have a very famous landlord tenant lawyer near me, and he's got a cool little graphic. So I think that some people may appreciate this. So I'm going to try and put this onto the big screen here.
Okay.
So yeah, here he is. So this is Justin Smith, the real Justin Smith. So it says, and just in case you're listening and you're not watching this on YouTube, so it says, so he goes by Shake Your Booty on a Dance Floor. That's his Facebook name. So Shake say, no pay rent, get out of tent.
Oh my gosh.
Landlordlawyer.com. So
that might be my favorite lawyer ad ever. Words, I mean, seriously, that's pretty epic. Oh my God, that's fantastic.
Yeah, I have to say, you know, I don't have any property in Michigan, but if I had to evict somebody, he'd be the guy to go to. I probably would go call Justin. Yeah, so yeah, sure. Yeah, that's got to be a great URL too, the landlordlawyer.com.
Yes, sir. That is great.
Yeah, I love it. And well, we're talking about great stories. You were also a property manager for a time. So
yeah, that was a fun project too. It was a 60-unit multi-tenant multifamily actually, and it was being rehabbed too. So in the process, I wasn't in charge of the rehab. I was just doing the leasing side. But to just see what a mess it can be in the middle of a rehab, trying to keep, I mean, it was like a literally, you know, to the studs almost throughout the entire property. And trying to roll into the new configuration was really fascinating, and also educational from a partnership standpoint too. Ended up leaving the job when the partnership failed, and they had decided to dissolve the partnership. So been there and done that and seen it myself, and then saw it again in this case, and it was really interesting. Right. It's just part of the deal. You're going to have partnerships that don't work out. So you have to be upfront about that to yourself and to others, and saying, well, what do we do if this doesn't work out? And having an exit strategy on paper somewhere is a very good decision.
Yeah, all good rules. What about your tenants though? I mean, I'd say that anybody who's managed property for any amount of time has got to have some amazing stories. So any of those that you can actually tell on the air?
I still think my favorite is, there's a no pet clause. They didn't do pets at all. And she moved in like this huge, a huge dog. And It was like, what did you think was going to happen? It wasn't like she was trying to sneak in a little gerbil or a little goldfish on a countertop anywhere, or even a cat. At least a cat, could probably get by pretty stealthily. But she got the biggest dog she could imagine and tried to get away with it. And of course, that just didn't fly. And she had to be evicted for that reason. And it was just like, I still to this day, I'm like, so you'd rather be evicted and keep your dog. So by the way, I think pet rent is a good idea if you're comfortable at all with the idea of having pets. Just charge pet rent, because people will pay it. I promise. It's a great income source as far as I'm concerned.
That's right. I've seen the stats. I want to say that it's I don't even know how high, but so many tenants have pets, and if you're allowing it, absolutely. And it's fair too. I mean, they do cause some damage, so charge a fee up front, charge rent each month.
Yep.
And that's a great way to go. Now, did you get to handle the eviction case too, or was that?
No, I actually I didn't. I was only in the property management role at that point, and that's all I cared to be in. And,
okay.
Perfectly okay with me to just be done with that case and pass it off. So
awesome. So what about your work at the Housing Authority of Kansas City? You did you were housing development coordinator, I believe.
Yep, that was great.
Yeah. I think people would like to know about affordable housing. I think that's a hot topic. Obviously, our country needs more housing in general after a dozen years or more of underbuilding. Gosh, we must be already up to about 15 years of underbuilding. But one of the things that's really gotten the short shrift is the affordable housing, which again, if you can build, I mean, if the economy is not saturated, or if I should say the market is not saturated, why not just build the biggest houses you can possibly build? And that's what, naturally speaking, builders, they want to make a profit. That's what they've been doing. So how do we get back to building affordable housing?
Well, and this is a hot button for me. As you can imagine, that topic has been stuck with me throughout my career. There's a number of public-private things we can do. Tax increment financing is a wonderful thing. For example, you can really make the difference in terms of the cost structure for the developer to make it economically feasible to build.
Wait, get back up a second.
Sure.
What did you say?
Tax increment financing. It's basically a district where you can issue financing to do infrastructure for the project. And it's basically funded by the taxes paid in the district. So it's an incredible way of financing infrastructure and creating a feasibility add-on. Of course, tax abatements can be a huge thing. But frankly, George, my latest thing is really there's far too much bureaucracy at the state law. In fact, I'm very interested in California. The problem is very acute in California. And really the problem is you have, first and foremost, too many different jurisdictions weighing in. You've got the building code, which again, should be a minimum. And I don't want to advocate, absolute chaos and anarchy, but to be clear, the degree of difficulty to get things built in California is just simply unacceptable. So what I advocate for is development as of right. So basically, I argue that the state needs to come in and pass overlays that says, hey, you meet this box, and this box, you're good to go. For example, so especially transit oriented is really my hot button. It was like, man, if it's on a corner of a really busy street that needs that's right by transit, by all means. And parking ratios is another one where we have these unreasonable parking requirements that can tip us into unfeasibility when we would otherwise build. And there is the missing middle problem too, is like you would otherwise build a 10 to 20 unit building, but parking ratios and other regulatory problems get in the way of doing it. And what do we need now? We need houses now. We need multifamily. We need fourplexes. We need 10 plexes. We need 20 plexes. We need it all right now, fast. And we're just not responding. And I think the biggest problem is the regulatory constraint. It is unreasonable at this point, especially in California, for example, where the problem is quite acute. And it's just bizarre to me that like the NIMBYs on one hand are actually aligned with the far leftists who want Santa Claus to come in and build a bunch of apartments, and the NIMBYs don't want it at all. So in the end, you got Santa Claus over here that's never going to happen, and you got NIMBYs over here on the other side. They're strangely in bed together.
Well,
Weird.
A lot there to unpack. Certainly, I know that from my own experience on the development front, the timing. Time is money, and if the permitting process takes forever, and yes, I've met the NIMBYs, I've seen their pitchforks, and every time you've got to come back to the meeting next month because somebody's upset that you're building something nice that makes their house look like a garage. It's just terrible, right?
Boy, don't even get me started on a historical. You got a 1950 building that's historic. Oh, you mean it was like the Constitutional Hall or something? No, it was a drive-through diner. Okay.
Right. Yeah.
All right.
Yeah, parking ratios. I could say a little bit about that. I've got a place I'm about to purchase, and I want to say there are about two parking spots that are generally used. And I think everybody there is just riding bikes, I'd have to imagine, because there's not a whole lot of mass transit. So, hey, on the other hand, when things get renovated, sometimes you need those parking spots, but, wouldn't it be better to have loved and lost, so to speak? Yeah. You can't build these things in the first place, right? And particularly as you see obsolescence, right? You're never going to have more people parking than the day that it opens. In 10 or 15 years, probably slid down the economic spectrum a little bit, and you've got people there who are not going to be using whatever the parking ratio is, whether it's 1.5 per unit or 2. It's just it's probably too much.
let the market. And again, I have varying degrees of a market economist in me. Never more so the case in housing, where we've got this weird monopoly thing that's just kind of and I guess again in the long run, it's better for the existing incumbent developers that they've got a nice barrier of entry. And they win. And again, maybe that's what I do. I just go start winning because I'm owning in these markets. And but I don't think that's the right thing for society, that we make this problem is just absolute insane to me. And I plan on doing something about it. I'm probably going to become an enemy of many, which I'm quite okay with, because I'm going to tell the truth.
I like a little controversy.
Yes, as Harry Truman like I said, I'm going to tell the truth, and they're going to think it's hell.
Okay.
And the truth is that they both need to wake up. And just because you live there doesn't mean you have the right to keep neighbors out. And just because you think Santa Claus is real, that doesn't mean Santa Claus is ever coming to fix this problem. You need to think about the different, maybe market economy might be useful in this case. So I'm going to make a lot of friends, George. I can tell already.
Well, that's good. I think it's the quality of your friends that matters the most. So I'm glad you're speaking out, and 100% right, that there are a lot of market solutions, and I think they're usually probably the ones that are first to get panned by a lot of people. And unfortunately, they're probably the first that would probably actually do something like, don't make the process take forever. And yeah, I love that the parking ratios, that's not one that I've heard about recently, but
that one's a sneaky one, because you don't even realize how much that affects things. And in fact, I didn't really until I give a ton of credit to real estate Twitter on that one, because it really was like, oh, I'm like, never heard of it. And then I came across it on real estate Twitter, and boy, that was an insightful education. So really good stuff.
Yeah, good stuff. And congratulations to you for finding a productive use for Twitter.
yeah, it's funny. I also think the same. I have a narrow lane in which Twitter is a good thing, and that's commercial real estate Twitter, and you meet some great folks on there. And then outside of that, it's absolute garbage. And boy, I can't even get on TikTok for that reason. I'm just like, no, just no.
Yeah, I'm with you on that. I have not yet found a lot of value on TikTok, but I still do put out all my stuff. Doug, you will be on TikTok.
Well, you know what? I'm going to be controversial, George. I believe it is a Chinese government spy op. So no, I will never be on TikTok.
Okay.
So yeah, friends in China, if you're watching, hi, I said hello.
Well, good. Well, I mean, again, I understand that your comment is directed towards protecting the people. Yeah. It's the government. The government is the problem. It's not the people. So
110%. And I will say that too. I endorse that wholeheartedly. It's not the people.
My wishes are for the Chinese people to
know more freedom and know more movement of and freedom of speech. That's a big problem I have. I can't drive that.
Yeah, good. First democracy in Asia. It's a little bit ironic which direction that went, but 1911.
Very much so.
Looked like it was going to be the shining star.
Yep, and still, in ways, it is true that they've got the best of some worlds, but and again, a good, bad, or indifferent, they have, if they want to get something done. It's the only way I kind of sort of. And again, I think this is why we like Singapore so much. It was an idea of centralized planning, but in the marketplace, market economy. So you had government completely aligned to marketplace objectives, and so you had the hybrid of what's ultimate. The problem we have here in this case in California, for example, is you don't have incentives aligned with the market, and so it's really much more difficult, and we can see the outcomes are terrible. I mean, look at the homelessness problem in California, and it really is heartbreaking to me, and it's something I just can't abide. I'm going to do something about it. And again, I'm not going to fool myself to think I'm going to change the world. I'm probably not going to change much more than a couple blocks, but if I can make some change whatsoever, I'm sure going to do it. Beats the heck out of voting. Okay, not that I have any feelings or thoughts on this, George.
Nice. So now we talked about politics, we talked about geopolitics. Maybe we could bring it back in and talk a little bit about finance. So
sure.
I saw you on Andrew Rosenberg's show the other day.
Yeah.
And great show, by the way, because
Thank you. It was a lot of fun.
Yes, yes. Great appearance and great show too. I want to say a lot of people, I think they do a show like this
Mm.
so that they can find, a lot of people do a great show like this so they can get a highlight reel. But
Yeah.
Andrew's show, CRE Spotlight, CRE
Yeah.
Spotlight,
Yeah.
it's really, it's like the whole thing is a highlight reel because
It
he
is a
has
highlight
people
reel.
come in, they're experts in their field and they talk about a topic of their own choosing 3 or 4 minutes. So I heard you talking about finance, and that really piqued my interest because I feel like in syndication, we're really at the nexus of real estate and finance. And a lot of people, I don't know that they necessarily look at it as investing, or maybe they're investors and they don't look at the entrepreneurship aspect. But I think you really got to understand all three legs of the stool. You got to know finance, you've got to know real estate, and you've got to be a real investor. So you're talking about some things like the Kelly criterion, and people who understand finance or traders, they understand Kelly criterion and things like that. So why don't you tell us about Kelly criterion and how does that relate to investing?
Sure. And to give a 50,000-foot view before I get into that, what I think is unfortunately somewhat missing in the syndication space, and this isn't a bad thing. They're just people who are good at operating, for example, good at finding deals. And what I think is great is it is a team sport. So what I advocate for is finding somebody who's good at the finance side, because what I think is really, really missing, you see it in the traders have a daily battle with risk monster. And where I don't think you in commercial real estate think about risk that much. You talk to an insurance agent to insure your property. But in terms of, well, am I taking a good gamble here? Is this a good bet? And that's where I think that some of the single greatest things, and I have a very blue collar background, never exposed to, super mega wealthy investors. And one of the things I found on the way of trying to model Warren Buffett, you've got Charlie Munger, you've got folks like Edward Thorpe, the genius, very underrated. I don't think many people really know who Edward Thorpe is, but Edward Thorpe was like one of the most genius investors, a math professor. Actually, if you've seen the movie 21 with Kevin Spacey, it's actually based on his story of, okay, I'm going to figure out a way to beat gambling. And then he's like, well, I like gambling so much. Let's go to Wall Street and play. And he ended up creating one of the greatest hedge funds to ever exist. And so I just finding out about that and like reading Taleb and reading guys like Thorpe, you start to understand, okay, so our first main thing we're trying to do is get asymmetric risk going. Are the bets I'm about to take, are they favorable to the upside? You can take one-on-one bets, and one-for-one bets, okay. Hopefully you're not taking too many, negatively weighed bets. But ideally you want bets that are where the odds of probability of success are increased. And this is also related to Buffett, where he talks about the margin of safety. There are a couple ways of getting there. Buffett looks at it more from a margin of safety. It's a little easier. You don't have to get all quantitative about probabilities and doing all the math on the side. But really, they're kind of getting at the same problems. Like if I have a margin of safety, like what is the downside risk here? If I'm looking at that, then I conversely have an inverse of a higher asymmetric to the good side. And so where Kelly criterion gets into play is, and again, you don't have to do this mathematically or anything, but you can really think in terms of where is the optimal position size in that asset class, for example. And that's where Kelly criterion comes into play. And what more I think about it, asymmetry you can kind of do kind of offhand, but I think to some extent you really do have to sit down with a little bit of mathematics with the Kelly criterion, but it's not too crazy. But you're trying to figure out what's my optimal bet size. So what you're trying to do is, am I taking on too much risk for that amount of money, basically? And that's really what it's, and you've got poker players that are inherently, the really great poker players are good at this, like in their head, which is crazy to me. I've never been able to acquire that skill as much as I love to play online Texas Hold'em. Never really got the instinct for it, but they have a way of knowing, okay, given the pot size and given the bet I'm making, is it a good idea for me to go all in at this point? And so given the odds of where the cards are, for example, you can say, well, no, this is a bad bet. I shouldn't take that risk. So having that idea of what is the right amount of risk for the amount of money I'm putting on, and it's a very interesting topic. I could probably go on for days about it. It's it's really interesting to me.
Right. It is fascinating, as I remember you're going to have to, as you mentioned, you have to estimate to what degree the odds are in your favor. So
Yes.
when you're going in and playing against the house, that's one of those negative weighted bets. I mean, unless you're a card
Yes.
counter, unless you're
Yes.
one of those at Thorpe's, etc. And what you really want to do is you want to be like the house. And if you could make the likelihood is a small amount of money on each trade and lose a lot from time to time, like the house does, perfect. That's something that's very much in your favor. So I actually read 3 of Jack Schwager's books.
Oh
You know what
yeah.
I'm talking about? Yep.
Yes,
Yeah.
for sure.
Okay. Yep.
For
He's
sure.
huge in the trading world.
Yeah.
But the funny thing is, the reason I did it was partly to meet the great characters like Thorpe. And I can't remember if he was the one that he went to a casino, and after he played for a little while, he came back, and I guess they drugged him. And then he
Whoa.
went back. It might not be him, but I
Yeah.
read at least 3 of his books, and
Mhm.
it keeps coming up again and again. I played cards, and next thing you know, I thought I'll become a trader.
That's right.
So it's one of those. It might not be him. He claims that they locked his accelerator pedal, and he's going down some mountain road, and I don't know, pretty crazy stuff. But I
Yep.
don't count cards, but I am fascinated by people who do and who apply that probability instinct to their trades.
What's
But
also
anyway,
fun about that story, though, is when Thorpe was at MIT, he had a colleague there was a leader in computer development, and he created a wearable computer that was very elementary, but was able
Yes.
to wear a computer
Yes.
and use it to bust the house open. And I can imagine this is back when the mafia ran a lot of the casinos too, pretty seriously.
Yeah.
So I'm sure he had some interesting stories that he may or may not have been able to share. So very interesting stuff.
Yeah, true. So then I think that was the same fellow, because I do
Probably.
remember that wearable computer. Yeah, that was when they were trying to break roulette, correct?
Yep.
Yeah.
Yep.
Hilarious.
It's like crazy. It's like, man, that's fun stuff. And then he's like, you know what? If I go play stock market, I can go dominate. And what I love the most about Ed Thorpe's story is he created a pricing formula for options, and nobody else had one yet. And so he was out there killing the options market. And then eventually a couple of finance professors come along, and they publish a theory called Black-Scholes, and they eventually win, or they eventually get awarded the Nobel Prize based on that, when basically really Thorpe invented the philosophy. And it was funny. I thought, that guy has to be a little red about that, right? And funny thing is, he was interviewed about this, and he said, no, I kept going. I didn't want to talk about it. I wanted to keep flying under the radar, and under the radar he did. And it's like, well, there's a lot to be said for that too. And I think we're tying that now, I'm going to land the plane. You can't imagine I could tie this to commercial real estate, but here's what I'm going to say to tie the thing in a nice bow. I believe risk adjusted, for most people, commercial real estate is actually superior to playing the equities game. And think about this for a second. Wall Street has a fleet of PhDs in astrophysics with computers trying to win and trying to beat you. And I don't know about you, and I know for a fact I'm not good enough at math and computers to play up against that set of folks. So I generally, for most people, unless you want to live it, breathe it every day, equities are not risk adjusted the best play. And I am all for, I do believe in the value investors mantra, which is just buy the index and call it good. Because also too, there's the behavioral aspect of it. Sitting there and watching your stock that you know in the long run is going to win, man, it's tough to have the discipline to keep your position and not interfere. So there's that behavioral aspect there. I will say commercial real estate from that standpoint was way different. It's just not the same animal from that standpoint. And also, I feel like when it comes to commercial real estate, advantage over equities is the leverage. I mean, the leverage is huge, and the tax benefits. So when you get to all the pros and the cons, I still think for most investors, commercial real estate is an excellent alternative to being involved in the equities market. And it's not to say that you can't do well in the equities market.
Right.
I just think to do well in the equities market, and again, Oh, here's another thing. EMH, efficient market hypothesis. When Warren Buffett was in the game, he had literally books that he was just motivated enough and had the vision
Right.
and the dedication to pour through.
Let's back up a second,
Yeah,
Douglas.
sure.
Let's make sure everybody understands the efficient market hypothesis.
Right.
So if the efficient market hypothesis is true, then what is the case?
The implication of EMH is that you cannot outperform the market if information is available to all the players. And funny enough, I feel like the internet was basically the basically proving the case. In that, so back in the day when Buffett was picking stocks and really winning, he didn't have to compete with a fleet of PhDs, for example, with a computer and with all that automatic trading and with all the algorithms. So given starting today, and I think he's even said this as much, as like, I don't know that I could do quite the numbers I did back then. And so it's very fascinating to have an investor saying, well, now if I were starting today, I don't know that I would be in the same position from that standpoint.
Well, what about his trading size? I mean, I believe that's what it's mainly. I think even today he'll claim that if he was managing under $10 million, he would be back to making 50% a year.
Right.
And I believe it, because there are a lot of very poorly known issues out there. Right. And if you don't have a single analyst on a stock and you're willing to do the research, yeah, boom, you study 10 or 20 like that, yeah, you're going to find some gold. You got to turn over a lot of rocks. It's a lot of work. And if at the end of the day, well, I can only invest like $1 million and I've got, I don't know how many billions he's got, but he runs like the 4th largest company last time I checked in America. So, I mean, he's just got tons of capital. Those small cap stocks to him, they aren't worth anything. Right. I mean, it's a drop in a very large lake.
It's very interesting too that it's a hard problem to have. He's literally tilted the game where he's like, there's only so much I can do, and I think that's fascinating. And
exactly,
why I admire them so much is they just really were so disciplined about their method, and again they talk about temperament a lot too, and so they had the temperament also that really made equities a good home for them. And I don't know, you know, if you're considering investing and you want to advance your lot, that's why. Choosing equities is okay. I don't have a big problem with it, but I do have some questions. Is Tesla fairly valued, for example? How about GME? How about AMC? I mean, these are not fairly valued. And then, and I love this, it's like, well, you know what? I'm going to become a short seller. And guess what?
I saw that one coming.
I love this quote, and this is by my idol, John Maynard Keynes. John Maynard Keynes said, the market can stay illogical longer than you can stay liquid.
That's right.
And so short selling is a fool's errand as well, as far as value investors go. Now, there are some people that make a living at it and are good at it, but I just think in the end, it's a tough way to live.
Well, anything that could get me wiped out, I'm not terribly interested in.
Right.
And yeah, GME, GameStop is a great example. You could have got wiped out for at least the last year on GameStop. And last time I looked, most of those meme stocks are still trucking. Now, the fact that some of these companies have no earnings, no dividend, doesn't seem to matter to the meme people, but at some point it will. I mean, the recession will get hard enough that people are going to start getting crushed, and they're going to take money out from everything, not just from their Bitcoin stash.
Well, and this is why, as a value investor, and my dogmas and my religion prevent me from investing in things like crypto and startups. We don't call that investing. That's speculation, and it's outside what we do. Crypto is cool. It's interesting. It's innovative. But at the end of the day, can I get paid to hold it? You don't get paid to hold it. And two, you do not know what it's worth because there is no metric to value it. Same thing with a startup. You're just taking, it's back to the roulette wheel. It's like 22 bread. Why not? I don't think I want to live that way, especially and the big thing comes into, in terms of being responsible for others' capital, I just can't feel comfortable. I don't want to live that way if other people's capital is on the line, especially in terms of being a fiduciary. It's just doesn't wash for me, and it's not the way, and I think of it in terms of, if my grandmother were alive today, would I want her in that? And that metric for me really serves me well as far as I'm concerned, because it's like, this is just not, if I'm protecting family wealth, that's just not how I'm going to go about it.
Right. Now, you mentioned a lot about tilting the odds in your favor. You mentioned value investing. We've talked about margin of safety. I wonder if you're familiar with Monish Pabrai. He wrote a very famous book, The Dhandho Investor.
I have heard the book. This is probably one on my list that I haven't got to, but I have heard very good things about it.
Yeah. Again, great book. So if you like what Douglas is saying about tilting the odds in your favor, he likes to say, heads I win, tails I don't lose much.
That's right.
Those are the sorts of investments.
Yes.
And he goes through the story of the Patels who they buy small motels, which is an investment where you live in your investment. You're there all the time. You can do a lot of work to make sure that that investment goes right. And when you buy right and you are willing to put in that sort of sweat equity, it's very, very hard to lose much. Markets can always turn against you, but at the end of the day, if you're adding value and you bought right, very difficult to lose. So yeah, something I would highly recommend.
Could not agree more. And I think that's the number one argument for real estate in terms of going to zero and protecting capital. It's just, it's very, very, very hard. If you'd have to really go out of your way to run a real estate property into the ground. Now it has happened and I've seen it, but you have to have active
right,
mismanagement
partnership.
Yes, a lot of bad things going on. A lot of
things can go wrong, but you're right. As long as it's cash flowing,
right,
or you have reserves. I guess those
right,
are my two roles.
Yeah.
Well,
and would you agree also? I'm a big believer. I'm not an operator, so being ruthless about who you are as an investor. I am not an operator, so I don't operate. I partner with good operators. I bring them capital. I put them in place to be who they are as excellent operators. And so figuring out your lane in commercial real estate is real important from that standpoint too. If you don't feel like that you want to be an operator, there's deal making and there's capital raising, there's operator. I feel like those are the three main, and then you add development, there's project management. So I feel like those are the lanes. And if you can, pick a lane, I feel like you're better off. Like go to the lane where you are naturally gravitating toward.
Righto. Well, how about this? So we haven't shown these questions in advance. So Douglas confirmed to me that he has not been watched. He hasn't watched a complete video. So this lightning round here is going to be 100% extemporaneous. Are you ready?
I'm ready. Let's have some fun.
All right. What is some advice you would give your younger self?
Confront your fear. That's the big thing. I think that's the one thing that keeps myself and many investors on the sideline too much, is you have to confront the fear and make it a counselor and not a jailer, as Tony Robbins is off to say. It really has to counsel you, so you don't want to do dumb things, but you also can't let it win. And so that's my number one advice.
Love it. Yep. Fear, not your master, but a teacher. No. What is the best real estate advice you have received?
Best real estate advice. Man, that's a really good question. I feel like it's Gerald Heinz. Read his biography, and I love development. And what Gerald Heinz did, he started in like the 50s. And how many cycles have we had since then? He never put more than 50% debt on a property. So to me, it's all about leverage. Development deals 50%. I think for an existing property, you can be less conservative and up to 70 maybe, but manage your leverage and live a long time in the business.
All right. What's the worst real estate advice you've heard going around?
The worst real estate advice.
Yeah, a lot of bad advice going around in this business.
Boy, I've heard a lot of bad things. I would say, boy, I might be controversial in saying this. The loudest voice in the room may not be the best. I think I'll leave it at that. If you see somebody everywhere, then I start to get a little bit skeptical. And unfortunately, with commercial real estate, most of the really great syndicators, it's a opaque. I'd like to say it's a opaque business, which is good because it's not like everybody's in it. But the really great syndicators, you really have to network a little bit to find them. So if you don't know a good syndicator, they tend to fly under the radar a little bit just by nature of the business.
Yeah, I love that. I think that's outstanding advice, particularly for the passive investors, that, yeah, there's not necessarily a correlation between the number of LinkedIn followers and how well they're going to do for you, or how much integrity they have also. So, yeah.
I mean, unfortunately, good marketing, unfortunately, in America is really seen as competence, but good marketing is just good marketing. doesn't mean they're good at what they do.
Love it. Well, here, this is where we're going to take a nod to the randomness in the universe. I've got some random question cards. So just tell me when to stop cutting the deck.
Okay, stop.
All right. Top card.
Top card, here we go.
What is your favorite quote?
I can't say that there's, I guess I read so much, it's very hard, but I recently came across this one and I still think it's the ultimate winner. It's by Carl Jung, great psychologist. And Carl Jung said, until you make the unconscious conscious, it will direct your life and you'll call it fate.
Interesting. From a man who loved the classics.
That's right.
The fates. Name a book that's helped to forge you as a leader or as an entrepreneur, and why?
Boy, I have to give a huge nod to Robert Dilts, NLP extraordinary guy. It's Success Factor Modeling is the name of the series. There's 3 books that are a great addition to any countertop that if you're thinking about leading or doing. And a lot of it is based on what I think we get a lot of focus in a lot of these leadership books is like, okay, you have all these external skills, you got yada, 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 you got negotiation, you got sales, you got external things. What I love about the Dilts book and the Dilts series is that there is a significant focus on your inner game as well, because I think those are both very important.
Excellent. How has a failure or misstep set you up for later success?
The legal business was very educational for me of not partnering too quickly. Very bad, super shotgun wedding choice and partnership, and that really did serve me very badly in the long run.
Right, awesome. Normally, I'd have you give us a quote to help forge our listeners as leaders and entrepreneurs, but our random question of the day was usually my last question of the day, so we won't do that. I will just ask you, how can our listeners reach you?
Sure. LinkedIn and Twitter are the very best, but right now, recently, LinkedIn, Douglas Dowell, JD on LinkedIn is very much the best place to reach me.
Excellent. Well, Douglas, I want to thank you for taking your time to share your experience with our audience. Thank you.
Absolutely, George. So thrilled to be on. Thank you so much for extending the invite. It's been a great time. Thank you so much for having me.
Awesome. Thank you.